Hey gang, Matt from Easy Breakouts, about to start another current market trend review, but before I do, just wanted to mention that if you find this video helpful, be sure to click on that subscribe button down below. Also, you can view additional videos by visiting our YouTube channel. Alright, let's hop into our analysis. So folks, wow, what a walloping across the board for the NASDAQ. Tech stocks here, to a certain extent, some of the Russell, smaller cap stocks with big gains, but you wouldn't know it if you were looking at Dow stocks. Some of the financial stocks, some of the industrials had a really nice day today. So Dow actually up 70 points, the only one of our majors that was positive on the day, but the S&P down 7, NASDAQ down 72.5, Russell off 8 points. We had the crude posting up into highs here of almost 51.8 before backing off. Folks, there's a couple of reasons why it seems like crude might be setting up for a much higher move if we take a look at the charts. And then gold here still hanging out on lows. Bonds actually posting new lows today before rallying back just a little bit to close positive on the day. But we're going to see all this on the charts, and as always, we're going to start off with the S&P 500s. So taking a look at the S&P 5s, folks, now it kind of seems like a no-brainer, but you know, a couple of days ago we were talking about a little bit of this trend line here, and again, you know, when you break a trend line, it doesn't mean you're going to go straight down. What I typically look for when a market or a stock starts to break down below a ascending trend line or break above a descending trend line is I start to look for prior support and resistances to help guide where I feel like the stock should get support, or where it might start to look a little weak if it's not getting support at certain areas. And one of the things we pointed to is as we broke this trend line, right, you can see it on the 60-minute chart. One of the things we pointed to was the 2195s and the 2180s. You can see here 2195s and then 2180s. The reason we looked at those two levels, we'll have to zoom in just a little bit more to see it. 2195s here on an intraday chart, you can see how that was an area of support here, 3-time support. And you can see even today, we bounced off of it intraday. We found like a little bit of a rally for about an hour before we rolled back over, selling resumed, and then we undercut it. So that tells me that other people were watching the 2195s, and now that we're trading below the 2195s, we have to look for by Friday either a pop above that area. We might be able to get it on non-farm payrolls, kind of a market moving event. But if we can't get back above that 2195s with a quickness, chances are we're going to start trading down to the 2180s, which is the next spot where we encountered some buyers and sellers. So we had some support here 3 times right at the 2180s, but more important, 2180s also served as a bit of resistance here on the 60-minute chart. And also on the daily charts, you can see on that 2180s, there's a little bit of resistance. There's a bit of a gap down here, even back into September. So folks, as we're starting to kind of fade off of these highs, now we need to start watching how the market behaves at these critical support levels, okay? Also, another point to make about the market is we are now under pressure. And it's not because of distribution days on the S&P. It's actually more leaning towards the NASDAQ distribution day and the behavior of leading stocks. And we're going to see that in just a second. When we gauge the market and we say market's healthy or market's, you know, potentially sideways or market's full on in a downtrend, when we make those types of calls, we're looking not only at the individual chart action of the indices, but we're also going to be relying on how are the trading setups looking for individual stocks, the stocks that had the best relative strength, the best, you know, performance over the last several weeks. We're going to be looking to how investors and traders are treating those stocks to kind of get a feel on the overall market health. And right now it's under pressure. Okay, that's a big change versus what we've had over the last 3 weeks. That means for a lot of people, that's going to be a reduced size trade, maybe even just sitting on hands. But right now we're just seeing a little bit of weakness. Nothing to really panic about just yet, but just be aware that we are seeing the S&P 500s backing off that 2200 hold number, coming down below the 2195s, and we're going to be looking for potentially support right around these 2180s. As we look to the NASDAQ, not such a rosy picture on the NASDAQ. We were denied up at the 5400s. We talked about that. And then a couple of places here that I'm looking to on the NASDAQ. So the initial place that I was looking for the NASDAQ to get support here is at the 5300s. We sliced right through that. The next place after that, I was saying watch this 5300s, and actually if you zoom in to the charts here, you can see that at the 5300s, there was just no hesitation right there. So you saw how on a previous support level, the S&Ps caught like a little bit of support bounce and then cut under that level. On the NASDAQ, it was just straight selling. First thing in the morning, we saw the big cap tech names, Facebook, Microsoft, Apple, Google, or Alphabet rather, Amazon, all selling off, all hitting new lows, dragging all the rest of the techs down with it. So folks, as we look to the NASDAQ here, we basically undercut the 5350s, we've undercut the 5300s, and if you look at this, for some of you sharp chart people out there, chart readers, you'll notice that we are actually down below the 50-day average. This is a close below the 50-day average. From a technical basis, that's not the best trading behavior. We'd like to have both our stocks and our indices trending above the 50-day average. So again, one final note about this: tomorrow, non-farm payrolls are going to be reported pre-market. Those are potentially market-moving numbers. We would like to see that the NASDAQ catches support right at these levels and maybe catches a little bit of bounce above like the 5280s to get it above those 50-day moving averages on a daily time frame. Okay, that's going to be an important thing for the NASDAQ to try and do here on Friday as we look to the trade. Otherwise, if we hang out down below these 50-day averages, it's going to look a lot weaker, and we'll see why in just a second when we look at the individual stocks. But folks, relative weakness here. Wow, look at the relative strength, really just taking a dive today. And we'll see this in the charts. So folks, again, NASDAQ is the one with heavy distribution day counts. That indicates to us institutional selling. That indicates to us that we need to be maybe taking a reduced size approach to some of our trades, and maybe just take a little bit more of a less aggressive stance towards our trading over the next few days. As we take a look at crude, crude, on the other hand, on fire. So we talked about yesterday, or I should say on Wednesday, OPEC coming to an agreement, cutting production. That boosted crude. Then we had a bigger than expected draw on the inventories, further boosting up crude. And we closed right up here at the 50s going into yesterday's action. And you can see I had mentioned 49.20s as a place, and I'm going to show you why. Okay, 49.20s was a prior high back in August. It was an area of support here throughout the last several months, and then most recently was an area of resistance in the middle of November. So one of the things I had pointed out is if you see the crude rallying up through the 49.20s, that could be a negation of that potential head and shoulders we are looking at. And also you see here that a lot of other traders probably were looking at those 49.20s because you closed up, you had one final little just double check of support right at those 49.20s before rallying off and posting even higher highs today. So folks, we got up to the 51.80s. Now here's what's important: taking a step back and looking at the bigger picture charts. Okay, just a few videos ago, I was mentioning on the intradays how there was potentially a head and shoulders forming on like hourly charts, and that was somewhat negative, right? But now that we've broken the upper shoulder of the head and shoulders, and we basically negated the potential topping pattern, now we take a look at the larger patterns, and what you actually see here is basically a head and shoulders in reverse. Technicians would call this an inverted head and shoulders. What it potentially represents here is a bottoming process, again, just like what we saw with the head and shoulders on the intradays. In order for this to complete, it needs to break the neckline, which is right here. I'm kind of drawing it right around the 52s. If we can get crude to trade above the 52s and stick the close, not just a fade, I think potentially you could have at least a 25-point rally here in the crude. And again, it's not going to be overnight. If you look at how long it took this pattern to unfold, it'll probably take a few months. But what it's indicating to us is that once you break these 52s, that is a technical level where inventory and supply have capped out any further price progress to the upside on crude. If we break it to the upside, that means whatever seller was currently selling at that level is no longer there, and potentially you could run another 25 points here, which is the distance from the head to the neckline. So watch for that on the crude, any sort of close above 52s, and you might have a nice year-end rally, even a rally into the Q1 2017 on the crude contract here. Gold, taking a look at gold, we talked about how the longer we hang out below these 1200s, the more likely it starts to look that gold might be under pressure, potentially almost down into maybe the 1050s there for the gold. Trade above 1200 is going to be critical to stop some of this downwards momentum, 1200 being that whole number. Again, we're looking at weekly charts here. This is a big formation that we're seeing on the gold. So the first thing for gold bugs out there to even try to hang on to some of these price levels, we've got to stay above the 1200s. As we've seen in some of the prior market trend review videos, I think we've called gold pretty spot on. We've been looking at the 1310s as a place for the start off to sell. Then we looked to the 1250s, a prior support level. Once we cut that, we came right down to the next area, which was the 1200 evens. Now that we've undercut that, we've traded lower by about 30-40 points here. So again, gold trading very technically, and again, I think if we get above 1200s, maybe that can be the first inklings of potentially stopping some of this momentum to the downside. Finally, as we take a look at the bonds here, bonds hit a new intraday low before rallying towards the close. That pushed the 10-year yields to highs that we have not seen in almost 2.5 years. Look at this. We haven't seen these highs. We touched right up to them in April 2015, but also going all the way back to October of 2014, even September of 2014, folks. So at this point, potentially we could encounter just a little bit of resistance here on the 10-year yields, which means a little bit of maybe a support level or a bid coming into the bonds. But honestly, looking at how this chart has just ripped off the bottom, it feels like there might be an intermediate term bottom, if not a longer term bottom, being put in to the bond yields, and that would be a top correlating to a top in the 10-year, the ZN contracts. But other than that, folks, that's kind of where our intra-market analysis is. One thing that we wanted to point out when we take a look at our individual stocks, look at all of these stocks that, I was looking at them as potentially good entries just 2 days ago. So if we reverse this chart, just 2 days ago, these look like high handle entries. Now here's the key. They never broke out. Okay, when you look at chart patterns, you've got to wait for the breakout. Just because you see a cup and handle or a high handle or a double bottom, you can't just go willy-nilly buying them. You have to wait for the breakout. Folks, we never got these breakouts, and they just continue to sell off. And man, they really took it out to the tech. Look at this, like IPHI. That's in the semiconductor group today. Even the mighty NVIDIA. Wow, look, they really went after the NVIDIA today, and even that one, to a certain extent, looking like a bit of a high handle, although never breaking out. A couple other names that I've just been watching, hoping that, it could give us a secondary entry. Look at this mind body. Just 2 days ago, I'm just reversing the charts here. That looked like a pretty solid high handle here, and it never broke out. And then it just faded, and then it just got taken all the way down to the 50-day average. And so even the best high-tech names, right, the highest relative strength tech names, they've come back to the 50-day average, and the big cap leaders like your Amazons, all coming down. Now actually looks like the 50-day average is behaving like a bit of resistance here on some of these bigger cap stocks. Right, look at the Facebook all the way back down to the lows, pre-election lows here on the Facebook. Same thing with Apple, very weak here, right? So as we look across the board, definitely there's selling going on in tech. We see it in the top names. Luckily, we've been able to avoid most of them. We've been in some of the infrastructure plays. Those actually were positive, although they faded towards the end of the day. You can see here a little bit of a high handle breakout. We are able to scale out, sell into some of these. Also, the financials, big beneficiary of the rally in the bonds. So if you take a look at the XLF, look at that, right? High handle right here, boom, and breaking out. So even the likes of, like a JP Morgan here, high handle, breaking out, ripping higher here. Some of the more, regional banks here like Zion Bancorp, right? Look at that. Looks great. Northern Trust NTRS here, that looked great as well. Nice little breakout. So, it's hard to gauge right now. I think the uptrend under pressure is the right call because we do see certain sectors moving. the financials, most specifically some of the infrastructure stocks. Take a look at like some of the steel stocks up on the day, right? So they're still catching a bid, but we are seeing a rotation out of technology, that's for sure. And we just have to wait to see if that rotation out of technology turns into something a little bit more ominous. Right now, market's under pressure, and the game plan always has been, always will be, looking for the best relative strength stocks breaking out of recognizable chart patterns on good volume. Those are the three things we're going to be looking for no matter what the market conditions. Folks, other than that, non-farm payrolls coming up Friday morning pre-market. Just watch that. That's potentially market moving. Hey, folks, and we just wish you a great trading day ahead, and join us for the next market trend review video over the weekend. Hey, by the way, if you haven't done so already and you're liking the analysis, go ahead and hit that subscribe button down below. And as a reminder, you can also view additional videos by visiting our YouTube channel. Or if you'd like to find out more about Easy Breakouts, go ahead and click that Show More right above the comments section to find out more about Easy Breakouts. But other than that, have a great trading day ahead, and may the trend be with you. Take care, everyone.